Welcome to Talk Tickers. Today we're diving into the Q1 2025 earnings call for GoGo Inc. They're a major player in in-flight connectivity.
That's right.
And in short, they had a really strong start to the year, beat expectations across the board, it seems.
They really did. GoGo reported first quarter results that definitely exceeded what analysts were looking for on revenue, adjusted EBITDA, and free cash flow.
Okay, so let's unpack that a bit. What were the highlights?
Well, service revenue saw significant growth, both year over year and sequentially from the last quarter.
Good momentum there.
Definitely. And they got a lot more of their GEO-based aircraft online. That number increased substantially from last year and even last quarter.
And it says something about terminal shipments?
Yeah, a notable rise in new terminal shipments. And importantly, many of those were line fit installations with the aircraft manufacturers, the OEMs.
Line fit. Okay, so these are being installed right as the planes are being built. That sounds like a big deal. Why is that so important?
Oh, it is. This line fit strategy, it essentially locks in customers right from the start. It creates a much stickier revenue stream.
Harder for them to switch later on.
Exactly. And it also streamlines the whole installation process, makes it more efficient, more cost-effective for the airlines too. So that definitely contributed to that strong service revenue growth we saw.
Got it. Now, their other main business, air to ground, those numbers saw a slight dip. What was behind that?
Yeah, a modest decline there. They said it's mostly due to maintenance suspensions on some of their older ATG-equipped aircraft.
Okay, so temporary, potentially?
They think so. The company anticipates this will actually turn around when they launch their new broadband network later this year.
Ah, okay.
And what's interesting is, even with that dip, they're seeing record numbers of upgrades within that existing air-to-ground fleet.
Yeah.
People moving to their more advanced platform.
So penetration of the newer tech is increasing.
Exactly. So even with some older planes temporarily offline, more customers are adopting the better technology.
And it wasn't just the service side performing well, equipment too.
Correct. Equipment revenue also showed strong growth compared to last year and the previous quarter.
Which probably reflects those new Galileo terminals starting to ship.
That's likely a driver, yes. Overall, profitability remained healthy, really supported by those strong service margins.
Okay, so strong financials all around. Now, a huge part of GoGo's story right now is integrating that big merger they did. How's that going?
The merger with Seccom Direct seems to be progressing very well. They called it a positive strategic move, and the numbers seem to back that up.
Okay.
They've already achieved over 85% of their targeted cost synergies. The savings and efficiencies they expected from combining the two companies.
85% already. Wow, that's quick. So they're actually ahead of schedule on realizing those savings.
They are. GoGo is now on track to exceed their initial synergy cost savings guidance for this year.
Impressive.
And they expect to achieve the full amount in 2026. Part of this involves a significant headcount reduction, about 21% expected by the end of Q2.
Right. Consolidation often means redundancies. Where are they finding these savings specifically? What kind of moves are they making?
Well, key projects include consolidating their manufacturing operations. That's moving mainly to Brumfield, Colorado.
Okay.
And they're centralizing their data center operations in Melbourne, Florida. They also plan to sell their current Melbourne headquarters building.
Selling off real estate.
Yeah, and they actually anticipate that the proceeds from that sale will largely offset the costs they're incurring to achieve all these synergy savings.
Makes sense. Okay, let's pivot to the products. GoGoGalileo, their low Earth orbit or LEO offering. Sounds like things are moving forward there.
Definitely. Big news was receiving PMA for both their HDX and FTX Galileo antennas.
PMA, remind us what that is.
Parts manufacturer approval. It's a crucial regulatory step. It basically allows them to actually produce and sell these antennas legally. And the FDX approval actually came through ahead of schedule, which is always a good sign. This lets them start shipping terminals and, importantly, continue getting the STCs.
The supplemental type certificates needed for installing on different planes, right?
Exactly. And they are seeing actual customer adoption of Galileo already. They mentioned significant commercial momentum, including agreements with OEMs, the plane manufacturers.
Like that line fit deal we talked about?
Precisely. And they have activated customers now for GoGoGalileo. The HDX antenna, that's one for smaller to mid-sized jets, is showing strong progress. STCs, OEM wins, and it's already generating revenue.
How many STCs for HDX so far?
They've got 5 conferred just this year to date. That includes approvals in Canada, Europe, notably for the popular Embraer Phenom 300, and their first US FAA STC for the Gulfstream G200.
So those STCs are basically the green light to install in those specific models.
You got it. They're essential for wider adoption.
How many HDX units have they actually shipped then?
In Q1, they shipped 36 HDX units. Now, 20 of those were for the ongoing STC development efforts, testing and certification.
Okay.
But 8 were for actual revenue-generating installations. That brought in about $1 million in equipment revenue just in Q1 for HDX.
Not bad for early days. And the line fit status?
HDX is already a line fit option with Textron on several of their jets, Longitude, Latitude, and the new Ascend. And GoGo anticipates announcing a second OEM agreement soon.
Wow. Okay. The pipeline looks good then.
Looks very strong. For HDX in North America alone, they mentioned over 300 potential deals in the pipeline and another 25 opportunities identified for the larger FTX terminal.
Okay, let's talk FTX. Bigger planes, faster speeds.
That's the idea. The FTX terminal is designed for larger business aircraft, think super midsize up to the heavy jets. And it's expected to deliver speeds up to 195 megabits per second. Pretty fast.
Very fast for in the air. STCs for that one.
They already have 10 STC agreements in place, covering those larger jet categories. And they also mentioned an easy upgrade path for some existing customers. A software update for the Seccom Direct routers that many advanced customers already have will enable a relatively straightforward upgrade to Galileo.
Okay, good integration. Now let's switch back to their existing air-to-ground business and the upcoming 5G network. What's the latest there?
Right, so as we touched on, that slight dip in ATG aircraft online is expected to be temporary. And they're seeing that increased adoption of their advanced platform within the ATG fleet.
So the base is upgrading?
Yes. And on the 5G front, seems like good progress. They've completed the manufacturing of their custom 5G chip. It's currently in the packaging process.
So getting closer, launch still expected this year?
Launch is still anticipated later this year, yes.
And how many aircraft are getting ready for this? Are they pre-installing hardware?
They are. They now have 301 aircraft pre-provisioned for the 5G launch. That's up 29% just since the end of 2024.
Decent jump. Approvals needed there too.
Yep. They've received the PMA for their 5G antennas, and they already have 25 STCs in hand for 5G installations across various aircraft types.
Okay. There was also mention of something related to the FCC, GoGo Evolution.
Ah, yes, the FCC Secured Networks Program. GoGo's branding it GoGo Evolution. It's essentially a fully funded government program.
Funded.
Fully funded, yes, to accelerate the removal of certain foreign telecom technology from their ground-based network infrastructure, the whole rip and replace idea.
Okay. And how does that affect their customers?
Well, alongside that, they're looking at offering alternative incentives to their older GoGo Classic customers to encourage them to upgrade to the new LTE network. There's a transition deadline in 2026.
Trying to move people off the old tech.
Exactly. And their new C1 LTE product, which is designed as a sort of simple drop-in replacement for those classic systems, actually saw immediate shipments right when it launched.
So a lot of moving parts on the product side. It sounds like they see significant demand driving all this.
They absolutely do. They highlighted a big opportunity in the business aviation sector for just more broadband usage. Especially, they noted outside the U.S., where they believe penetration is currently lower.
International growth potential.
For sure. And they're also seeing really strong demand in the military and government mobility market.
MilGov. Tell me more.
There seems to be a noticeable shift toward Seccom's broadband solutions. Remember, Seccom Direct brought strong MilGov relationships, particularly under what they call the Proliferated LEO Earth Orbit, or PLEO, program.
PLEO, using lots of low-orbit satellites for government comms.
Basically, yes. And importantly, the Department of Defense has significantly increased its projected spending on these LEO satellite services.
A growing budget helps.
Absolutely. And adding to that opportunity, the U.S. Air Force has this goal, known as 25 by 25, equipping 25% of its aircraft with SATCOM by 2025.
Okay.
Well, reports suggest that program is behind schedule.
Which creates an opening for companies like GoGo.
A potentially substantial opening, yes. They also mentioned increased demand from non-U.S. governments looking for commercial-grade communication systems.
So what's their grand strategy to capture all this? Business jets, military planes, international?
Their strategy is really centered on driving rapid growth and that long-term, high-margin recurring revenue. That's the sweet spot, focusing on both business aviation and these MilGov markets. They also emphasize their hardware and software is kind of network agnostic. Meaning it allows for faster and hopefully cheaper upgrades down the line as network technology evolves. And of course, the Seccom Direct acquisition gave them that much larger global sales and service footprint.
Broader reach.
Yeah. GoGo likes to point out they're currently the only player in their target markets offering broadband across multiple orbits, GEO, LEO, and ATG.
Covering all the bases. Okay, let's circle back to the hard numbers. Can you recap the key financials for Q1 2025?
Sure. Total revenue was $230.3 million. That's up a whopping 121% compared to Q1 last year, obviously boosted by the merger.
Right, the Seccom contribution.
Exactly. Total service revenue was $198.6 million, up 143% year over year. Adjusted EBITDA came in strong at $62.1 million.
And the margin on that?
That resulted in a healthy margin of 27%. Net income for the quarter was $12 million. Or 9 cents per diluted share.
Solid numbers. And what about their outlook? Did they update guidance for the rest of 2025?
They actually reaffirmed their previous guidance for the full year. No changes there.
Okay, what are those numbers again?
They expect total revenue between $870 million and $910 million. Adjusted EBITDA is projected between $200 million and $220 million.
And free cash flow. I remember something about that being lower this year.
That's right. They anticipate free cash flow between $60 million and $90 million. They're explicitly calling this a trough year for free cash flow.
Why is that?
Because of ongoing strategic investments, particularly rolling out these new technologies like Galileo and 5G. Capital expenditures are expected around $60 million, but that excludes any reimbursements they might get from the FCC for that network program.
Okay, so investing now for future growth. What about longer-term targets?
Longer term, for the combined company, they're aiming for about 10% annual revenue growth and adjusted EBITDA margin settling in the mid-20s% range.
Okay. One last financial point, tariffs. They mentioned that. Any major concerns?
They believe their exposure to current and any proposed tariffs is relatively modest. It primarily affects the manufacturing side.
How much impact are we talking?
They estimate the financial hit is around $5 million for the year. And crucially, that's already factored into the guidance they just reaffirmed.
So it's baked in?
Seems so. They also highlighted that most of their manufacturing is actually in the U.S. now, and they previously moved production from Ottawa down to Brumfield, Colorado.
Okay, good context. So summing it all up then, what's the main takeaway for investors looking at this Q1 call?
Well, the strong start to the year and sticking with their full-year guidance definitely suggests positive momentum for the combined GoGo and Synergies Direct.
The integration seems to be working.
The progress they've made on Synergies, hitting over 85% already, points to effective integration and, potential for better profitability ahead. Plus, the advancements in Galileo and 5G position them well for that growing connectivity demand.
And the MilGov angle seems promising.
That looks like a significant long-term opportunity, yes. Investors should probably also keep an eye on that expected free cash flow growth starting in 2026. After this investment year, that could potentially fuel debt reduction or even returns to shareholders down the line.
What specific things should people watch?
Key metrics would be the trends in aircraft online, both ATG and GEO, and also the average revenue per user, ARPU.
Yeah.
And of course, tracking the actual deployment of the 5G network and how quickly that Galileo service revenue ramps up in 2026 will be really important indicators.
All right, great summary. Now, let's shift gears to our final segment. This is where we brainstorm some interesting, maybe slightly unconventional investment ideas based on everything we've just discussed. And remember, everyone, this is absolutely not financial advice, just some food for thought, some creative thinking.
Exactly. Outrageous but plausible trade ideas.
What's your first one for us today?
Okay, so given what we heard about the U.S. Air Force's 25 by 25 satellite goal potentially being behind schedule.
Right, the 25% connectivity target.
And knowing GoGo through Seccom Direct is a key provider for the DoD's LEO services under that PLEO program. Well, a speculative but maybe interesting trade could be to take a long position in GoGo.
Betting on catch-up spending.
Essentially, yes. Yeah. The thinking is the Air Force might need to accelerate its deployment to try and meet its goals, and GoGo could be a major beneficiary through, more or larger government contracts. It plays on that combo of rising defense spending and a specific acknowledged lag in Air Force connectivity plans.
Definitely playing the government angle. That's interesting. Got another one.
Okay, second idea. This one focuses on the commercial side, specifically Galileo. We heard about the strong early interest and the pipeline for the HDX terminal, especially internationally.
Yeah, they said the international pipeline was maybe even bigger than North America for HDX.
They hinted at that, maybe a 60-40 split favoring international.
Okay.
So a more nuanced trade could be a paired strategy. go long GoGo, but simultaneously short a competitor you think is maybe too focused only on the North American business aviation market.
Okay, why the...
The rationale is that GoGo's expanded global reach from the Syccom deal gives them a significant edge as broadband demand potentially grows faster outside the traditionally dominant North American market. You're betting on that international growth being a key differentiator for GoGo.
Interesting contrast trade. Some intriguing ideas there to definitely chew on. And that brings us to the end of our deep dive into GoGo Inc.'s Q1 2025 earnings call. We've covered their impressive financial performance, the exciting progress on the LEO and 5G fronts, and their strategy for tackling those key growth markets like BizAv and MilGov.
A lot going on there.
Indeed. And remember, as always, this discussion was for informational purposes only. It should definitely not be taken as financial advice. Please always do your own thorough research before making any investment decisions.
Absolutely.
So what were your key takeaways from this? What questions do you still have about GoGo's path forward? We really encourage you to keep digging into the details and form your own informed opinions. Thanks for tuning in to Talk Tickers.